What's going on, everybody? This is Bull Run Crypto, and today we're going to talk about crypto terminology, things that you'll hear, and we're going to bring some explanation to those phrases. So we're just going to simply go over to ChatGPT, and I've got a whole list here, and so I'm going to give you some terms along with their explanations. Bitcoin, the original decentralized digital currency that uses blockchain technology. So that's the very first cryptocurrency that was created on the blockchain, and they had the first white paper. They're the OG. So Bitcoin, now you know. Altcoin, that's any cryptocurrency that is other than Bitcoin. Kind of easy to get, right? It's right there in the name, an alternative coin to Bitcoin. Blockchain, a decentralized digital ledger that records across multiple computers. Okay, so that's a digital recording system, a ledger, and it works across multiple computers. So it's a cryptography. Decentralization, the distribution of power away from central authority, a core principle behind most cryptocurrencies. This is what Bitcoin was founded upon, a decentralized cryptocurrency. That's a decentralized cryptographic currency. It's supposed to be secure from hacking. The actual blockchain, that's the point. A wallet, a digital tool, software, or hardware used to store and manage cryptocurrencies. So just like you have a wallet in your pocket, you have a crypto wallet, but in virtual digital space, right? So it's on the interwebs. Private key, a secret number that allows you to access your wallet and authorize transactions. So that's basically your backend. That's like your password to your wallet. That's your password to your funds. So don't ever give that to anyone, your private key. Now there is a difference here. There's a public key. So a cryptographic code that is shared publicly to receive funds. So that's like your address. That's like your home address. You give that to the bank. So if you wanted someone to send you a check, you give them your home address or your routing number. It's kind of like a mix between your home address and a routing number or an account number. More or less like a account number, I should say, than it is a routing number. So it's like your account number, but on the blockchain. Smart contract, self-executing code on a blockchain that automatically enforces the terms of an agreement. So self-executing means it does the execution on its own. It doesn't need a third party or another person to execute. It's a smart contract. With a regular contract, you need to draw up a contract, and then someone's got to be a notary, and someone's got to be a witness and all that. These are self-executing. You don't need Swift or any other financial intermediary. DeFi, that means decentralized finance, okay? So that is financial services using blockchain smart contracts and eliminating traditional intermediaries, okay? So DeFi, decentralized finance. NFT, non-fungible token, a unique digital asset that represents ownership of a specific item or a piece of content. I don't know, Michael Jordan's pro basketball card, a rookie basketball card could be an NFT. We saw that with JPEGs or pictures or collectibles that were artwork, right? That was a big thing last cycle, NFT. Then you have stablecoin, a cryptocurrency designed to minimize price volatility by being pegged to a stable asset like the US dollar. So the US dollar is considered a stable currency. That's why it's the global reserve currency, because it's the most stable. And a stable coin pegged to the US dollar is considered a stable asset. So you can hold your value in there, but it's not going to go up in price. So it's not an investment unless you're staking it for interest. In some cases, they allow you to stake stable coins for up to maybe 10%, depending on what the coin is and where it's being done. So, but it's not going to go up in price like from $1 to $2. Mining, the process of verifying transactions and adding them to the blockchain in exchange for rewards. That's mining. So Bitcoin mining, okay, is called proof of work. So proof of work, a consensus mechanism where miners solve complex math problems to validate transactions. So those are miners, okay? So mining and proof of work are synonymous. That's Bitcoin. Bitcoin is a proof of work network. Now, there's another type of uh, system out there called proof of stake, POS, a consensus mechanism where validators are chosen based on the amount of cryptocurrency they hold and are willing to lock up as collateral. Proof of stake. So it's kind of like interest. You put $5,000 in the bank and then you get 2% returns year over year. That's like staking. In some cases, like with Solana right now, I'm staking Solana between 7 and 10% depending on what exchange I'm on. So if I hold Solana, I'm getting 7 to 10% return just for holding it. That's why I really like Solana. Consensus mechanism. The method by which a blockchain network agrees on the volatility or validity of transactions. Let me say that again. The method by which a blockchain network agrees on the validity of transactions. Consensus mechanism. Having a scheduled reduction in the mining reward is a halving. Okay, so what is a halving? Most notably seen in Bitcoin, which occurs approximately every 4 years. So that means it becomes more expensive and less coins are produced every halving than previously on the last 4 years. That would be the halving. So that's why you typically see a price rise in Bitcoin around the halving time. We just had a halving in 2024. Before that, it was 2020 and then 2016. Now we have this term that's not used as much anymore. ICO, initial coin offering, a fundraising method where new cryptocurrencies are sold to early investors. We don't really hear that anymore. It's kind of like an IPO, an initial public offering, but it's called an initial coin offering. IEO, initial exchange offering, a token sale conducted through a cryptocurrency exchange providing more security and oversight. So kind of like an IPO, but done by an exchange. IDO, initial DEX offering, a token sale launched on a decentralized exchange. So decentralized exchanges mean they basically function autonomously. There's no one really behind it except for the creator who's basically taking his hands off the wheel, kind of like what happened with Bitcoin and Satoshi Nakamoto. Token, a digital asset created on an existing blockchain that can serve various functions or represent assets. So a meme coin built on Solana is a token, but they call it a coin. But it's truly a token. If you look at Ethereum, coins or tokens that are built on top of Ethereum, like Chainlink and some of these others. Although you'll notice sometimes a token will try to convert into a coin. Now you have utility token, a token that provides access to a product or service within a blockchain ecosystem. That would be like Chainlink. Security token, a token representing ownership in an asset like stocks or real estate and is subject to securities regulations. Now this would be something that is under the SEC. So there's always going to be this conversation going on whether or not it's a security or if it's not a security. So pay attention to the wording when you're hearing about that. We've had this challenge come up with Bitcoin. If it passes the Howey test, we can get into that terminology later. That's more advanced, but security token, pay attention to that as that comes up. Governance token, a token that provides holders voting rights to influence decisions on a blockchain project, like a DAO, a decentralized autonomous organization. Then you have the word liquidity. How easily an asset can be bought or sold without causing a significant price change. So liquidity, how liquid is it? Liquidity pool, a collection of funds locked in a smart contract to facilitate trading on decentralized exchanges. Basically meaning that they've got the money there to service the trading and the investments, people taking money and bringing it in and out. DEX, decentralized exchange, a platform that enables peer-to-peer cryptocurrency trading without a central authority. A CEX, centralized exchange, a cryptocurrency exchange managed by central company, similar to a traditional stock exchange, kind of like what we see with Coinbase. The word FUD, if you ever see that word, FUD, fear, uncertainty, and doubt, negative news or sentiment that may cause panic selling in the crypto markets. Another phrase is FOMO. You can get FOMO for many different things, but fear of missing out. The anxiety investors feel when they see others profiting, prompting hasty buying decisions. We see this when a price of a coin is just going to the moon. Everyone wants to chase it and buy at all-time highs, but what they're doing is they're chasing a ball that's going to come back down to earth. They're chasing something that's going up very quickly, but it'll eventually come back down. It can't go on forever, right? Because at some point it's going to reach a peak and correct itself, and then you have to throw it again and hope that you go higher. So don't FOMO if you can avoid it. Everyone does it. It's really easy to FOMO, but it takes discipline to realize, no, I'm not chasing it. HODL. Originally a typo for hold, it has become a mantra for long-term cryptocurrency investment. It's really easy. It just means hold, but it's spelled wrong. It's a meme, basically. ATH, all-time high, the highest price a cryptocurrency has ever reached. So the highest Bitcoin's ever reached was around 108,000. That would be Bitcoin's all-time high as of February 2025. All-time low, the lowest price a cryptocurrency has ever reached. That would basically be zero, right? Or it could be when it actually hit the market. So when Cardano first came out, I believe it was around 2 cents. So that would have been the low that I remember seeing Cardano. Bear market, a market condition characterized by falling prices and pessimistic sentiment. So bears, when they say the bears are in the woods, that means the bear is there lurking, which means lower prices are coming and staying there. When it's a bull market, a market condition characterized by prices rising and optimistic sentiment. Okay? So they say we're in a bull market. That means that we're looking at prices going up. Well, they have been rising for the last year or so, and people have been optimistic about that. Then you have market cap, market capitalization, the total value of cryptocurrency calculated by multiplying its current price by its circulating supply. We've done a full video on market cap. If you guys want to see it, check out our homepage here. You can see we have Understanding Crypto right here. This is for beginners. We have a whole playlist where we teach cryptocurrency to beginners. So if that's something that you're interested in, just go to our homepage, Understanding Crypto, and look at all of those. Right here is what is market cap. All right. Now we're talking about circulating supply. Whenever you hear that word, that's the number of coins or tokens that are currently available for trading. Bitcoin is set to have 21 million, but right now it has about 19.2 million currently circulating. Total supply is the total amount, which would be the 21 million when all coins are fully mined. Airdrop, the distribution of free tokens to a community, usually as part of a marketing strategy. If you started a meme coin, you may want to give away cryptocurrency to your friends and family. But keep in mind, you would have had to have bought those coins to sell. So you're really giving away some of your money, but you're trying to build your community. That's an airdrop. Typically, coins are investing in you as an investor when they're doing that, hoping that you hold and you don't just dump on them. Fork, a split in blockchain that results in two separate paths, can be hard or soft. A hard fork would have been like Bitcoin Cash. Here's a hard fork right here. A permanent divergence in a blockchain requiring all participants to upgrade to the new protocol. We saw that with Bitcoin Cash and Bitcoin Satoshi's Vision, or Bitcoin SV. That has gone away. It's no longer existing. A soft fork, a backward compatible update to a blockchain protocol. Gas, a fee required to execute transactions or run smart contracts on networks like Ethereum. Gas would have been high fees, right? So anytime you see that, that just basically is another word for fees. Layer 2, solutions built atop a blockchain to improve scalability and reduce transaction cost. That's layer 2. So we're seeing that with Lightning Network on Bitcoin. We're seeing that with Ethereum. We're seeing that with Cardano. Every blockchain seems to be rolling out a layer 2, which is just basically an upgrade. Sharding, a method of partitioning a blockchain network into smaller parts, shards, to improve efficiency. So that's just like more micro focus. Oracle, a service that supplies external data, weather, stock prices to a blockchain for use in smart contracts, kind of like what we see with Chainlink. Yield farming. Yield farming is a DeFi strategy where users lend or stake their crypto to earn rewards. Staking, locking up cryptocurrency to support network operations like validating transactions in exchange for rewards. Impairment loss, the temporary loss experienced by liquidity providers due to a volatility in the token pair. Here's a good one, wrecked. Anytime someone gets wrecked, slang for wrecked used to describe significant financial loss in crypto market. You'll hear people talking about, oh man, I got wrecked on that meme coin. It's because they got wiped out. White paper, a detailed document published by a crypto project that outlines its technology and purpose and roadmap. It's a white paper. It's essentially a peer-reviewed paper, kind of like a college paper, but it talks about what the coin is or what the plan is. It's like a business plan for the coin, but way more technical. Anyways, hope this helps. See you guys on the next one from Bull Run Crypto.